Hello, it's been a while. My name is Nikki Yu, also known as Awesome 10X Investing co founder. Today, it's been a while. It's September 15, 2023, and I'm glad to actually be able to tell all of you about this wonderful company. Today's free Friday class is Square. Is the outage an opportunity to enter at about $50 plus? Should we invest and buy and put Square in our awesome 10x buy list for those who are long term investing in the US markets? Let's begin. Okay. Square outages, an opportunity to enter at $50. Over the past few days, approximately 6 days ago, there has been Square outages. What this means is that a lot of businesses got disrupted. People who are using Square and Cash App in the US, they cannot use it because of DNS problems. There is a disruption. Square stopped working last week. The outage lost Portland restaurant owners thousands of dollars. You've got a lot of businesses actually failing to be able to process payments. Let's understand why this company came from a startup and actually just a side project to solve just a $3,000 glass blower dilemma. There's actually a guy, he was trying to sell a $3,000 glass blower, but there was no solution to accept credit card processing in that moment in time. This was around 2009. So there was a business friend and they discussed with Jack Dorsey. Eventually, that problem and you've got a successful multi-billion behemoth today, right? This is Square today. 2015, it got listed in an IPO around $10. It reached as high as $290 during the peak of 2021 on the ubiquity and growth of a lot of COVID during the pandemic. A lot of people were using cashless payments. And nowadays, it's trading at about $54. The price is actually same as 2018. And what has happened over that course of time? Should we buy? Few things to note. At the current price of $53, it's got actually cash per share of $9. So that means that you're able to buy this company at just $44. It's actually cheap in terms of what the gross profits have been if you check the last 5 years from 2018 to 2023. Has the company, if you bought it at 2018 versus today, there's been a lot of business differences and business growth, which is why we're actually on the buying bias here. Now, what happened? Why did the stock go down in the first place? Now, just a few weeks ago, there has been a widespread outage. All the payment terminals was failing. Businesses across US, UK, relying on the point of sale Square card reader couldn't process the customers' credit and debit cards. This hit a lot of sales significantly. Restaurants, cafes, shops, they needed to pay by cash or use other methods like competitors like Venmo just to transfer money. Some owners complained losing thousands of dollars because of this IT meltdown. And that's the reason why Square fell over the last week, trading at near its 52-week low of $3. It was a network infrastructure problem, breaking down services, a DNS failure. You can read a lot of news about these on the outages, widespread problems for users. In fact, there are 50 million Cash App active users and millions of merchants that got affected because of this DNS issue. Many frustrated business owners, of course, reported this problem. It had a global impact, impacting Australia, Canada, France, Ireland, Japan, Spain, UK, US, because Square is a global company. The company indeed has grown from just a card reader, a Square Reader payments in 2010, now serving an ecosystem. From a point of sale business offering loans, it had grown into having a Cash App business for peer-to-peer payments, providing also instant deposits, allowing ATM withdrawals, allowing cross-border payments, stock trading, direct deposits, Bitcoin trading, payroll, Cash App Pay. In fact, over the last 13 years, there's been just tremendous growth in this company, Square, that it didn't want to be named as Square anymore. It evolved into Block because of just the several growth of the products, the marketplaces, and the apps and the developer community, software and hardware for many business and merchants and users. So this company has become an ecosystem. Square, from just a powerful Square reader, it has evolved into so many businesses. Over that 13-year time span, they also introduced Cash App, which also became as large as Square. Just a few years ago, they bought a buy now, pay later business, Afterpay. Got Spiral. Essentially, the business has grown so much that the company felt it can't just be Square because Cash App alone is so huge. So this is what a typical merchant today gets. Square is a business that it's a point of sale solution helping online businesses and offline keyed in sales businesses not just processing a payment. Now you can handle online ordering, you can do loyalty. It's an entire suite of business solutions. Payroll, invoicing, website, bill pay, small and medium sized business solutions. The businesses have actually gone from just a transaction based gross profit to a lot of subscription fees because of a premium suite of solutions handling management, providing loans, marketing solutions, scheduling staff shifts, and more. So the problem before where you had so many business apps, it's now actually answered by just one solution. Instead of having an industry approach where you have commodity payments like just a Visa and a MasterCard, you've got several softwares and a disjointed M&A rollout. The answer of Square is an integrated solution. Handle everything for customers, on-demand delivery, handle your TikTok, your DoorDash, your Uber Eats, your Google for Business, handle messages, gift cards. You've got the commerce solution, integrate with all of Square for retail, point of sale payments. How about staff? Handle all their payrolls as well. And then even offer Square as a bank, provide loans, savings, checking accounts. So the differentiated platform approach has been very successful for Square, which enabled it to grow. This is how Square's solutions are for many business and merchants. They build remarkable software and hardware. It started from a reader. You can see all of the great hardware solutions, a stand, a register, a terminal, contactless chip readers, handling everything. As you can see, almost 5/5 star rating all over their software and hardware businesses. Of course, it didn't happen all at once. As we said, it was a 13-year growth play. It's a multi-year transformation from a single product to ecosystem of products and an omni-channel software platform because every business today is omni-channel. It's not just offline, and solutions of Square spans all throughout. And so if you can see, Square's multi-year transformation, 75% of gross profit in year 2022 was generated from software and integrated payments and banking. So this company has evolved, and as the company added more solutions, it's just been growing all throughout that time span. And from an IPO perspective, it's just been a growth stock all throughout. Square sellers are representing a diverse range of, as you can see, they serve a lot of retail, a lot of cafes, food and but also professional services if you're a yoga instructor, beauty and personal care salons, healthcare services, fitness like lawyers, doctors, home and repair, and so on. So the company is really solving a lot of merchants. And efficient paybacks and positive retention have driven strong customer lifetime value and return on investments. Square cohorts onboarded prior to 2021 have achieved or are pacing towards an estimated ROI of 3x or greater return over the last 4 years. And if you take a look, positive dollar-based retention has led to recurring revenue streams. This is the gross profit by cohort. And the solution of Square has been remarkable products. They are able to efficiently cross-sell all of these great products for high ROI acquisition. Multi-year transformation in the sense that most of their clients are using 4+ products over time. And of course, multi-year transformation, gross profit by product area, not just for US sidecar payments, now integrated with banking and international, such that in 2021, you've got $2.4 billion of gross profits. Strong growth at scale. Take a look at the businesses in big formats. Of course, the largest is still Square. 2022, the gross profit is $3 billion, but Cash App, from something like $47 million when introduced in 2017, has grown to be a giant $3 billion, now growing as much as Square. Indeed, these side hustles, again, remember, Square started just from solving a $3,000 glassblower dilemma, became a $3 billion business in 2022. Cash App, which was just a side hustle again, help people for peer-to-peer payments, and then introduce Bitcoin payments, and then introduce stock trading, and so on, is now a $3 billion gross profit business. Amazing. Now, if you look at the business expansion and the total addressable market opportunity, Square, aka Block, believes that the Square business or the merchant selling business is a $125 billion opportunity, while the Cash App business is a $75 billion business. Just these two businesses alone is a $200 billion gross profit business. That is how much the business could be, and they have penetrated less than 5% today. So Square represents $125 billion. How was that computed? International payment software service and financial services, $25 billion gross profit. Loans, US banking, $16 billion. Integrated payment software on US commerce alone is $86 billion. You can check about the small, medium-sized businesses, mid-market sellers representing this attractive target opportunity. You've got enterprise at $9 trillion. When you're adding just the mid-market and small, medium-sized businesses, you're talking about $8 trillion worth of US gross receipts. Huge seller sizes, huge US sellers that Square can capture as merchants continue to be attracted to Square's attractive business solutions. So let's penetrated in mid-market, 4% penetrated in small, and only 12% market penetration on micro businesses as of year 2022. And you can expand that with enhancing omni-channel capabilities on existing, grow them up market, increase global. How is the $75 billion computed? You've got the P2P or payment peer-to-peer, instant deposits, business accounts. That's a $29 billion gross profit opportunity. Cash App cards, introducing financial services. It's a $43 billion opportunity. And then the Bitcoin consumer trading, buying and selling in Bitcoin, is about $3 billion of gross profits. So the opportunity to expand is strong in the Generation Z and Millennials. So far, you've got about 56 million Generation Z, 72 million Millennials, and then the Gen X and Baby Boomers, a total of about 260 million potential customers. You've got will grow, and the percentage of Cash App monthly actives and Cash App monthly inflows. At the very least, you can see that just the Gen Z and Millennials, they're reaching about 20% to 26%, and they can also grow the Gen X and Baby Boomers as years go by. So the services work together cohesively as an ecosystem. You've got inflows, outflows, inflows as direct deposits, P2P. You've got a lot of instant deposits, and then you can integrate that with stocks, Bitcoin, Cash App cards, instant deposits. So far, Cash Apps today, they believe that gross profits in a quarter, if you just compute 50 million active users, inflow per month or per quarter is about $1,000 in a monetization rate, you get this gross profit. That's the reason why on a quarterly basis, it's about $750 million, a $3 billion as of 2022. That's actual. And we have driven, Square and Cash App has driven growth across a diversity of services and revenue streams. Very strong growth on instant deposits, and then add the financial services, and then crypto. So very strong arena of growth for Cash App. Greater engagement, you can see that. And total inflows so far in Cash App is $200 billion from just 10 billion. That is a 20x increase. That's a huge asset inflow in Cash App that you cannot just say, wow, that's small. Let me see some commentary. Oh, SE, wait, for the commentary, we like SE. Actually, we are buying SE here at about $36 to $40, but today's topic is about Cash App. So let me just discuss first Cash App. Maybe next week, I'll see if I can make a discussion on C Limited again. But yes, C Limited has dropped. We did sell when it was trading near $300, $250. Some of us bought at about $70 for C Limited, but we are still averaging and adding here at about $36 to $40. If you have SE, Shopee, just a quick answer. The Garena is declining. Definitely the cash flows, however, is $1 billion per quarter so far for C Limited. From losing $1 billion last quarter, they're now actually break even. I see C Limited actually going back to about $65 to $80 at the very least next year. So those who want to actually buy C Limited while it's low at about $36 to $40 should be accumulating. Just like today's topic, a buying opportunity actually on Square. So I think actually personally for me, I'm looking to reposition some of my cash toward these really undervalued growth stocks that the market is giving an opportunity. C Limited at 40 below, Square at about $50 area. I'd buy these. These growth stocks have legit businesses. So yeah, if you have commentary on Square today, which is our discussion or block, it would be better. But we can discuss about all those other stocks. Wait up. As I was saying, yeah, Cash App is such a growth business. The peer-to-peer payments business of Cash App is, of course, competing with a lot, competing with Venmo, competing with Zelle. But I believe that this growth trajectory of Cash App is a sticky product. So with a number of levers to grow and monetize inflows, you'll notice that there is an abundant, what I like about the business of Square and Cash App is that there's great gross profits. These are not really businesses that you're saying losing money. It's actually doing well. Product adoption has driven great inflows, monetization. So it's been just adding value-added services over time. From just peer-to-peer payments, you add stock trading, add a Cash App card, help them pay taxes, help them buy Bitcoin, help them borrow money, and the direct deposits. These value-added services obviously would keep on adding into the ecosystem. And if you notice, these Cash App cards are finding utility, broad-based utility. As of the top 250 merchants in 2022, 23% are being used in big box and discount retail. I would say that would be Walmart, Costco. 19% in restaurants, that would be your Starbucks, McDonald's. Gas and auto, a lot of your typical, well, any gas and auto. I don't know which ones. Either they're using ExxonMobil, Chevron, etc. Other retail, travel and entertainment, those that are using Expedia, groceries. So that's part of the big box and discount retail. part of the Walmart, Target, etc., and then telecom and utilities. Essentially, the Cash App card is getting ubiquitous, very common, and that's a sticky product. This is also an interesting data point for investors of Cash App. You've got $10 acquisition cost, which is significantly lower than what retail banks are spending for a customer, and very small versus neobanks. So I'm seeing that Cash App and Square is really an interesting ecosystem that you can buy at 2018 price levels. That's a great opportunity. For those who are tuning in, guys, I really think that today's great buying opportunities. I actually covered Square at here at about $50, 55. Even if it goes 40, it's just a great business. Just keep on accumulating and buying. Um, I understand there's a lot of difficulty with C Limited, but I would still put actually nowadays I'm buying it at $40 below, 40, 39, 38, 36. Can't actually know if that's the most bottom, but really great opportunity as well. And I'm also buying Disney recently. Disney at about 84. When it fell to $80, I still have a buy rating. Actually, those three companies at today's prices. Example, you're buying September 2023. What are the top buys for the month of September 2023? I think those three are really good, suitable buys from contrarian investing perspective. Of course, there's several reasons why they're also down. But I think the reasons why they're down are really fixable. But today's topic is Square. So let me try to answer Square first. Okay, the Cash App is great. Annual gross profit, as you can see. Even if you're just buying the business of Square or Block for just Cash App, this is amazing. A $3 billion gross profit business just on the Cash App business. Okay, so these are annual gross profits. Of course, the buy now, pay later is an addition that they bought in 2021. A lot of the bears hated this acquisition because they bought this, I believe, for $15 billion. So approximately half of today's market cap of Square. Square is trading at about $35 billion today, but they've got about $9 billion in cash. So, they've got, sorry, I think they have $5 billion in cash. The point is that half of the business today, they overpaid for Afterpay, buy now, pay later. Nonetheless, Afterpay is a great ecosystem connector for the merchants and the users, because the merchants sometimes they want to sell their wares, their stuff more. So the buy now, pay later system will encourage buyers to buy. Wait up. I think, guys, this is well, wait up. I have to answer this. Wait. Sorry. Hello, I'm back. I just had to answer a question. Um, Yeah, so you can see that this is actually an ecosystem. Afterpay, what we like about the buy now, pay later business is that obviously there's very little delinquency. You see just 1% risk loss on Afterpay receivables. This is also true for the buy now, pay later competitor, which is Affirm. It's just about less than 3%. And you've got a lot of these installments paid on time, 95% paid on time, 98% of all purchases incurring no late fees. Greater than 90% of Afterpay gross merchandise value comes from returning customers. I think the hoopla about all these buy now, pay later firms not getting the having so much sensitivity to recession losses is over displayed when you look at the data. And then, of course, if you look at the total gross profits, as I said, Square, aka Block, it's a really thriving gross profit business. They sold Caviar already. They've got a $6 billion gross profit if you just put Square and Cash App, just those two, merchants and users. And then, of course, a lot of that is Square. That's 2.7 B. For Cash App, that's 2.6. So roughly those $3 billion businesses. So what are the key investment highlights? Number one, understand that recession or not, the reason why the outage affected so many merchants, they got a lot of complaints, is because payment processing is not a discretionary business. It's how people run their business. That's the reason why during an outage, people got so scared how they will run their business. It's that essential. Now, obviously, there's great business prowess in Square Capital. Loans are often short duration and it can be adjusted. A lot of people also said Square is for small businesses. Obviously, that's not true. We can see Square having enterprises, micro businesses, and they've been helping not just the coffee cart businesses from 1 location to 10 locations to 20 locations. So as the companies grow, Square has been there every step of the way. Of course, the Cash App business, which was a side hustle in 2017, became a huge $3 billion business today. So that's easy and convenient. Over time, if people will buy Bitcoin, then Cash App is also there. Trade stocks, Cash App is also there. So millennials and Gen Z, eventually they'll become richer as boomers are, and Cash App is their preferred usage for their bank. So that's really going to be a huge business over time. And as we said, Square has evolved, which is why I like calling it Block as well, because it tells you that it is an evolution. It was not just a Square reader, but it is now a lot. It's got digital receipts, payments, tracking sales, inventory, and so on. There's so much subscription fees. They earn so much on subscription fees rather than just payment processing of transaction basis, which is why when you see those net dollar retention rates, it's been going up over time. People have been using more and more products, 1 product to 4 products. The products are so great, that's why it's sticky. People keep on using. So a couple of articles that I've read in Motley Fool that I also want to highlight. This is correct. Block has expanded beyond the initial Square platform. Agree. If you look at the subscription and service revenue, they grew 33% in the second quarter. Instead of just transaction fees based on sales, a lot of it is coming from processing. A lot of the suite, the business solutions, so, and this is not a transaction revenue, it's less seasonal. Block subscription and services includes processing and partnership fees for Cash App, Square Loans, fees from Afterpay, Tidal, etc. From 2017 to 2022, the gross profit of Block has grown 6x. Subscription and fees increased by nearly 20x. Nearly 63% of gross profit. Strong growth of subscription business continues. Second quarter gross profits have increased over the same quarter last year. Look at this article written by Courtney Carlson, the biggest number from Block's latest quarter, $1.18 billion. The point is that you've got a business growing those gross profits. It's not a problem if the company IPO went from $10 price of $50. Look at that revenue gross profit growth as well. And the good thing is that it's trading today at 1.6 times price to sales. So you've got a company that is trading actually at near the 2016 levels. So this company has been growing. It used to trade as high as 15 times price to sales. Now it's like down 90% from its peak. Well, not really down 90% from its peak. What's the peak of Square? I think it was about $290. So it hasn't dropped 90% yet. It's about $50, but should it go down to $30, even more compelling reason for you to buy Square. This is also a good article. I'm like sharing to you Motley Fool written by Neil Patel. Is Block stock a buy? Take a look at the last quarter ending June 30. Strong growth across the enterprise. The merchant-focused Square is up 18%. Cash App growth is 37%. Growth stock doing well in a recession. Bottom line showing signs of improvement, operating loss shrinking to $130 million. Just like many tech businesses, management is also lessening the hiring plan. We continue to improve our cost structure and raising EBITDA guidance from 1.36 to $1.5 billion. What are the competitive advantages? As I said, very sticky products, so they benefit from switching costs. Just like most of Shopify, you're using Square, you're using Apple. Those are sticky businesses. You don't just want to like shift. Oh, I remember Square. Shopify also a sticky business. Shopify also at $50, quite a good deal if you can get it there. So Square is a mission critical service provider helping handle everything for business entrepreneurs, payments, operations, great penetration and expanding the user base. User base is growing in Cash App. User base of merchants also growing for Square. Very valuable. Another thing, just recently, I think September 13, 2 days ago, an analyst also upgraded the stock price target price of 75. Berenberg's Palmer, block share price, an attractive entry point. You can check it out. This is in Yahoo Finance. Also, the same reasons why we like it. It's just a cheap product that people love. And then, if you recall, cash payments have been losing ground to digital transactions. This was accelerated, of course, by COVID, but this is not changing anytime soon. So this is a secular trend. When you think about the risks, a lot of people would probably say, "Hey, consumer app, Cash App, it has grown to about $200 billion from the gross profit is 3 billion and then the total assets under Cash App is 200 B. It could fall, but I would say 37% growth, that's not so bad. That growth trajectory, how much do you want? 37% growth, even if it peters down at 25%, still great. About the cryptocurrency Bitcoin, if you think about the gross profit potential here, this is just a $3 billion total gross profit. So I don't think that any declines on Bitcoin cryptocurrency is really going to affect the business per se of Square or Block. The Afterpay acquisition, yes, they overpaid for this and they have a growing competition on many fronts. But as I said, I think the business today of just Square and Cash App, it's a $6 billion gross profit, and the cash and the business today is $5 billion in cash and balance sheet, very little debt. Their debt equity ratio is 0.2. These risks are too little to not be priced in at the current levels of $35 billion today. Great references to watch in case you don't know how Square makes money. You can check CNBC, how Square makes money. Essentially, credit card processing fees, subscription revenues, Square Capital. They basically give loans, and Cash App, peer-to-peer payments, that the float, they make money on that too. And then this is a good. So these two are good references if you want to check out more. How Square makes money, what is Square, how Jack Dorsey's small business payment solutions are. And to end this note, I have prepared some quick 4-minute and 1-minute. I tried to learn video editing a little bit, guys. Let's see if my video editing skills has improved a bit. Let me see if I can share it. Wait up. Presenting. Okay. So the business Square Capital is great. So they provide listen, and this is an edited clip. I used Flickr. Can you hear?
Square says they discovered is that a ton of these sellers just couldn't get access to capital from traditional banks.
Our biggest competition is competing with friends and family. It's not going to a bank, because banks don't even come close to offering loan sizes that are in the scale that we offer at Square Capital, $6,500 or a $500 loan or a $50,000 loan. And so when a small business owner wants to gain access to credit, they have an emergency on a Saturday morning. Before Square Capital, they would go ask their parents, they would go ask their sibling, which is in many cases an uncomfortable relationship to be in.
Square's payment ecosystem gave it a unique look inside businesses that most lenders never had.
It's very unusual to have real-time data which can show revenue of a business, regardless how small it is. We can see increases, decreases, number of transactions per day, types of credit card, day-to-day business behavior based on the types of transactions that happen in a business. We think that type of granular data is extraordinary in terms of understanding risk.
In fact, they say this data is so powerful that they don't even use credit scores. Instead, they run their own AI.
The week. Sorry about that.
AI-based model daily, extending loan offers directly to thousands of businesses via the Square dashboard. Square also developed a different model for getting paid back.
Once a seller takes out a loan, they pay it back based on their average daily card swipes, so that if their business grows faster than expected, they pay back more. If their business is a little bit slower, they're closed for a day, they don't have the pressure of paying back the loan.
To protect themselves from holding all of this risk on their balance sheet, Square also sells off the loans for a lump sum to other companies and then continues to collect a servicing fee from the buyer until the loan is fully repaid. After dipping its toe into the market with $1.8 billion lent out to more than 140,000 businesses, the company announced its intent to go all in with a bank charter application in 2017. It's a move that could give Square a leg up on an even wider array of tech companies offering small businesses like PayPal, Amazon, and Stripe.
Oh, okay lang.
Square has also upped its game against other fintech competitors with Cash App. Originally launched in 2013, the Venmo-like peer-to-peer cash transfer app opened a whole new market for Square.
Cash App really came out of nowhere. I mean, this was not a meaningful piece of the business 2 years ago. Now it's a quarter of revenues and far outgrowing the rest of the business.
Like Venmo, Cash App makes money by charging small fees to link credit cards instead of debit cards, and for expedited balance withdrawals.
I think the popularity of peer-to-peer apps is because of the utility that they offer. You could see the structural growth of that market evolving for decades. There's so much opportunity for banking services across peer-to-peer apps because they really save consumers a trip to the bank.
Square already offers a collection of banking services on the app through its partner banks, and has stayed relevant with younger audiences by offering the ability to trade cryptocurrency on the app, a passion project of CEO Jack Dorsey.
It does provide an opportunity to get more people access to the financial system. So we're going to make sure that we are learning.
In 2018, Cash App's users doubled from 7 million to 15 million. And there may be more growth ahead.
As you can see, Square is actually doing well on Cash App so much that it went from 4. They've got about at least 50 million active users in Cash App, and it's growing very, very wildly. Sorry about that. This one minute. I know my skills are still very beginner like. I'm trying. Let's see. Um, just I just want most people who own Square to know just the bolts on, the best reasons why it works. The that's all for you. Evolution block. So my net to block. Who would have known that we would use our mobile phones to process payments? That's what the what the Square card reader does. Square makes the bulk of its money through credit card processing fees for in-person sales, online sales, hidden card sales, which are anywhere from 2.6 to 3.5%. Square offers also a robust POS system at no cost, a merchant service company providing sellers with hardware and software tools to run their small businesses. With Square, you get secure and seamless online and in-person payments, but an extensive suite of business solutions, all of which integrate seamlessly. But Square is not just for small business. Take it from founder Jack Dorsey.
It can't be a company that says, hey, we only serve small businesses, because that means as soon as they grow, which is part of our mission to help them do, then they would grow out of us and we'd have to point them somewhere else. We want to make sure that they see us all the way along their path. And as they go from 10 locations to 20 locations, or from a coffee cart to the size of a Starbucks, we can handle both extremes.
And yeah, that's it. So I really see this company, so I really see this company as a great buying opportunity for September 2023. And I think that sometimes when an opportunity strikes like these outages, just wanted to highlight that okay, it's so important that so many people are complaining. That's the reason to buy it. Of course, I don't know how long the disruption. I actually think the disruption was finished. It was already solved. It was just 14 hours. Nonetheless, the stock price has not yet recovered. The stock is still at $53.85. The stock price has also fallen since last quarter. It was trading near $85 already, and then it fell to about 60s, then 50s. And I don't really see a strong deterioration. Even if you say there's competition, you've got the likes of PayPal, you've got the likes of Affirm in the buy now, pay later space. I think that is a huge risk. Neither would Apple Pay, Zelle, and all these competition actually determine the business of Square or Block's future. The fact that it has, as we can see, they've got solutions all for businesses, merchants. You've got millions using their approach for payrolls, for basically a lot of staff payments, and they're omni-channel. They're an omni-channel software. I don't see people switching. People who are maintaining inventory with Square will manage your inventory with Square. They won't just leave. And the growth actually is proof of that. So I don't know why got sold off. A lot of the risks are, in my view, priced in. Fintech continues to be a growth stand for the global world, cashless society. Those secular trends remain in place. And you want a solution not just for online, but for a hardware and software solution. And that's where Square really is great upon. We like the integration retail. If there's one reason, in my view, why the stock has been selling off, obviously retail spending could fall. And that means that the processing that you will do for retail will fall. But that does not negate the fact that we're talking about a business that's having about $6 billion of gross profits a year. And you've got what? A business today that you're just paying for about 1.6 times price to sales. So that's any drop, I think it's you can answer it yourself whether it's a buy or not. But restaurants, cafes, they've already solved their problems with Square. So nonetheless, with Square and Cash App, I just see growth for this business over the next few years, and many shops will love the POS system, the terminals, and so on. Thank you. Okay na, na-end